Hello, everyone. Welcome to today's webinar brought to you by Bursa Malaysia. Today's our webinar's title is Growing Through Acquisitions. All right. So today we are very honored to have invited Ms. Leong Kit May, who is the Axis-REIT CEO, and also Ms. Tze Wee, the Senior Manager of Investment and Investor Relations on Axis-REIT, to talk about the outlook for the year and also their growth plans going forward. All right, so welcome to this session. My name is Shen Chu. I'm the moderator for this webinar. So may I give you a bit overview about Axis-REIT? Yeah. So Axis Real Estate Investment Trust is Malaysia's first real estate investment trust. So they have the diverse portfolio of 61 properties strategically located in the Klang Valley, Johor, Penang, Pahang, Negeri Sembilan, and also Kedah. So Axis-REIT has a solid industrial space portfolio where 92% of the properties are on industrial titles. As of 31st of March 2022, the occupancy rate of the Axis-REIT portfolio stood at 96% with a weighted average lease period, expiry period of 5.2 years based on rental. So Axis-REIT has more than 12 million square feet of space under management and a total asset value of more than 4 billion. So today, we are very honored and humbled to have invited the Axis-REIT CEO, Ms. Leong Kit May, and also the Senior Manager of Investment and Investor Relations, Ms. Tze Wee, to join us in this session to discuss about the outlook for the year and also the growth plans going forward. So, so in this volatile time, all right, this is a good opportunity for us to look into a defensive stock like Axis-REIT. All right. So without further ado, I would like to welcome both our honorable guests, Ms. Leong and also Ms. Chan, to join us in this session. So hi, Ms. Chan.
Hi, Shane.
Yeah.
Hi, Shane.
Hi. All right. So I think Ms. Chan will begin the presentation, right?
Yes.
Then of course, Ms. Leong will stay on for the question and answer. All right. So we will hand over the session to you.
Okay. Thank you, Shane. Right. Thank you, ladies and gentlemen, for taking your lunch hour to listen to our webinar. So just to take you through a agenda of our presentation today, we'll start with some highlights, followed by a portfolio overview of our properties. Then we'll go through some financial overview as of the results that we reported last quarter. And we'll end with some stock information. So this will be followed by the Q&A session after the presentation. So going into the highlights, Axis Real Estate Investment Trust has three main business pillars. So one of it on the left side, you will see is our leasing division. We offer a huge range of industrial and office spaces, and this is in strategic locations all around Malaysia. These properties that belong to the REIT is handled by our facilities management team. So the team consists of qualified professionals from the real estate profession, including engineers, chargemen, and also all the building management personnel who are placed within across the portfolio. Next, we have the acquisitions pillar, and Axis-REIT maintains a very aggressive acquisition strategy, and our focus has been on well-located industrial properties with strong tenant profiles and covenants. So we'll go into detail in terms of the acquisitions that have been completed recently in the slides after. Finally, it's the build-to-suit segment. So we are recognized for our timely execution of build-to-suit development projects. Build-to-suit means projects which are built according to the end user's requirements, and these are all industrial projects. So build-to-suit development projects also further enhance the growth of the fund above and on top of the acquisitions that are done. So our first build-to-suit development was completed in 2018, followed by two others. we will go into more detail as well on that. Now moving into the highlights. So on our property portfolio, we have a total of 61 properties. Out of the 61, 50 properties have 100% occupancy. And currently one property is under development. So as Shane introduced earlier, we have total assets under management right now, year to date of 4.15 billion, with a space under management of 12.5 million square feet. We'll go into the detailed charts after this on the movement of our space under management. Our financing ratio is 29%. And in terms of our industrial space portfolio, it is predominantly properties which are on industrial titles. So 92% of all our properties are on industrial titles. The portfolio occupancy is 96%, and the weighted average lease expiry is 5.2 years. So in 2008, Axis-REIT was reclassified as an Islamic REIT. So this is considered a Sharia compliant REIT. Our distribution per unit that was declared in the first quarter this year is 2.42 cents. We will also present later on 5-year trend movements of distribution trends. Our market capitalization year to date is 3.04 billion. And finally, I will go into more detail later. We have nationwide presence across Malaysia. So in terms of portfolio, as I mentioned earlier, our space under management year to date is actually over 12 million square feet with the completion of our latest warehouse, which was reported after the latest results. But as you can see, tracking from the IPO up to current year, we started off with 1.18 million square feet of space. And this has progressively, through very aggressive acquisitions over the years, cumulatively moved up to more than 12 million square feet of space. Now looking into more detail on the portfolio, in terms of the types of industries of the tenants who take up our portfolio space, we can see the majority are from the logistics sector, that's 37%. Next is followed by manufacturing players. So these are various kinds of end users. So this is 33% of portfolio. Then consumer products such as Nestle and Fonterra, these tenants of ours take up about 16%. Then the services sector takes up 10%, and we have a 4% of vacancy, which is recorded as to date. So in terms of the breakdown of asset type, in terms of net lettable area, correspondingly with the logistics sector, the logistics warehouse asset type is the largest area which on the portfolio. So this is close to half at 48%. Then followed by manufacturing facilities. This is also tracking quite closely to the diversification of industry that we just looked at just now. So manufacturing facilities take up 30% of the total lettable area of the portfolio. Then we have 15% of office industrial space. Now, office industrial space are properties which have office element up front, which is office building, office section, followed and at the majority of the property is actually industrial space, most likely taken up as a warehouse space. So this is 15% of the portfolio. We have 4%, which is office space. So the difference between office and office industrial is that office is pure office, 100% commercial space. And finally, there's 3% in hypermarkets. So we own 2 hypermarkets. which we will give a brief introduction to later in later slides. So in terms of occupancy type, we have two main occupancy types. We have multi-tenant, which are mostly in the office and office industrial space. So this is only 1/4 of the portfolio, whereas the majority, 75% of the portfolio is single tenanted, meaning there's only one single user, one single tenant in each property. So I'll take you through some of the example properties that we have across the different asset types. And these are our three pure office buildings. They are all located in Petaling Jaya, Menara Axis, Crystal Plaza, and Quattro West. So if you live in Selangor, you might be familiar with this because these three buildings are located facing the Federal Highway at Section 51A. And also Menara Axis is the HQ of Axis-REIT. Then we have office industrial. Now office industrial are also all located in Petaling Jaya. As you can see, there is a Axis Business Park, Wisma Kemajuan, Axis Technology Center, Axis Business Campus. All these are closely located to commercial centers and also not far away from the residential areas in Petaling Jaya. Now, this is the manufacturing facility portfolio. This is just a selection, not covering all the properties that we have, but it'll give you a good flavor of the kind of properties and the sizes and the locations that they are situated at. So in this slide, most of them are in Selangor. As you can see, we are strategically located in Shah Alam and Klang, which are the prime industrial areas in the country. So Axis MRO Hub, Axis Aerotech Center, Axis Shah Alam DC1, Axis Industrial Facility at Shah Alam, and Bukit Raja Distribution Center 2 and Axis Facility 2 at Bukit Raja. So these are the prime industrial manufacturing facility locations. We also have some which are in outside the Klang Valley area, such as Axis Industrial Facility at Rawang, and also at Nilai, which is in Negeri Sembilan. So if we move on to the next slide, these will be the ones which are outside Selangor. So Emerson's industrial facility, that's in Nilai. We have one in Pahang, which is currently our sole manufacturing facility on the East Coast. This is the Wasco facility. And across Johor, we have quite a few manufacturing facilities as well. So you will see Bionics iPark campus, which is actually located in a gated and guarded industrial park called iPark Indahpura. So we own ABCDEF, which is an entire row of Bionics operations within this industrial park. And on the next row, Axis Steel Center, this is situated at Silk, FCI Senai, and then you have Indahpura Facility 1, which is actually also situated within iPark Indahpura. Now, this is the largest portion of portfolio, the logistics warehouses. As you can see, these on this slide are also mainly the Shah Alam and Klang locations. So we have Axis Shah Alam DC2, DC3, 4, 5. And at Bukit Raja, we have Bukit Raja Distribution Center as well. And Axis Mega Distribution Center, we'll go into more detail later. This was actually our first built-to-suit development project, and we will talk about it more after this. Next, we have Axis Northport Distribution Center 1, and also as similar to manufacturing facility, we also have a warehouse in Senawang at Negeri Sembilan called Senawang Industrial Facility. And this is more of warehouses that are in the northern region and also the southern region. So on the top row, you will see Bayan Lepas Distribution Center. This is a DHL warehouse, which is in Penang. And then there's Seberang Perai Logistics Warehouse 1, 2, 3. We also have Axis facility at Batu Kawan. Now this is our another one of our build to suit projects, which we will explain more on the this project later. And then there's Nairo Warehouse in Johor, D8 Logistics Warehouse and D21 Logistics Warehouse are the ones which are situated within Pelabuhan Tanjung Lepas. Now, this is the two hypermarkets that I mentioned earlier. So the first one is Axis Hypermarket at Johor. This was formerly Tesco Bukit Indah. So the other hypermarket is TF Value Mart at Sungai Petani. So for us, hypermarkets have quite similar tenancy covenants to industrial, in the sense that they are just one large single tenanted property. So this is that's why we also have hypermarkets on our portfolio. Now, a bit of further detail on the completed acquisitions that we have done in 2022. So in the beginning of this year, we acquired Pasir Gudang Logistics Warehouse 2. We completed this on 7 March. And this is a large logistics warehouse with net lettable area of 276,000 square feet. The land area is substantial. It's 12.8 acres. The land tenure is approximately 30 years on a sublease. So this is fully tenanted, and we purchased this property at 32 million. So at the point of acquisition, the weighted average lease expiry was approximately 3 years. Then the next property, Indapura Facility 4 Johor. This was completed also in March, on 8th of March. The net lettable area is 59,956 square feet, with sitting on a land area of 2.26 acres. This Indapura Facility 4 is within iPark Indapura, so it's within this gated and guarded industrial park. And the land tenure is it's freehold. So the occupancy here is also it's single tenanted, 100%. And the purchase price for this was 16.3 million. The weighted average lease expiry for this property is relatively long. So we still have 10 years, approximately 10 years of lease on this property. And moving on to the most recent acquisition. This is DW1 Logistics Warehouse. Now, this property was completed in 25th April of this year. And the net lettable area is 1.15 million square feet. So this was this is a double-story warehouse. So this is the sizable acquisition to our portfolio. And the land area is 18.4 acres. So this sits on a sublease land tenure of approximately 33 years. The will acquisition for this is also 10 years, as similar to the previous property. In terms of the completed developments, the first one that we completed back in 2018 was the Nestle Distribution Center. So this is one part of, sits on one part of the Axis Mega Distribution Center, which is a 20-acre site. So the Nestle Distribution Center is called Phase 1. This phase has a net lettable area of 515,000 square feet. And the handover date was 2nd February 2018. So the construction time, total construction time for this was 12 months. And the lease commenced on this property on 1st June 2018. Following from that, not long after our first development, then we had another build-to-suit development called the Axis-REIT Center at Subang. So this is actually the industrial area that's located close to Subang Sky Park. And you might see this if you drive to Subang Airport. It's at the corner of one of the roundabout leading as you drive towards the airport. So this property is a manufacturing facility. It has a net lettable area of 179,978 square feet. The handover date was 31st March 2019. And the construction time that we took on this property was 8 months, with the lease that commenced on 16 December 2018. Then up in the northern region, we also had one build-to-suit development. This is for FedEx, and this is called Axis Facility at Batu Kawan. So this is basically the sorting center for FedEx. It's got a net lettable area of 44,000 square feet, and the handover date was 28 February 2020. So the construction time taken for this was 7 months, and the lease commencement was on 1st March 2020. Now we have one ongoing development, and this is Bukit Raja Distribution Center 2. So for this property, it was actually a recent acquisition, which was completed in 2021, and the gross built-up area that is planned for this ongoing development is 620,096 square feet. So this sits on a significant land area of 20.75 acres, and it's on freehold land in Bukit Raja. So the lessee for this property is Shopee Express. The weighted average lease expiry for this will be 15 years, and the lease commencement has been targeted for no later than 31st August 2023. So this would be the basically the development time from now up till the commencement. And the development value for this property is approximately 250 million, including the price of land. In terms of our acquisition strategy, it continues to be, we continue to aggressively source and evaluate the targets that are focused on grade A logistics facilities, high quality manufacturing facilities with long-term leases, and the tenants could be multinationals or local companies, and we would typically sign on leases with strong covenants. And of course, with properties, it's all about the location. So the location of the logistics warehousing should ideally be ideal for last mile distribution, and also for the kinds of location which the end users are looking for their distribution centers. And we also continue to look for office business parks and industrial properties which may have potential for future enhancement. So the total estimated value of acquisition targets right now is 120 million. And this is in various stages of negotiations with of different deals. So this is just an estimated value for now. Then that was on the property portfolio and also the acquisitions strategy. So now we move into a quick look at the financial overview of the REIT. As at 31st March 2022, our total assets stood at 3.76 billion. The total financing stood at 1.11 billion, and total unit holders funds at 2.53 billion. So the net asset value that was announced as at 31st March was 1.55 ringgit. The financing ratio is 29%, and the first quarter distribution per unit announced was 2.42 cents. So if you look at the income statement of the first quarter compared to first quarter of last year, 2021. So just focusing on the box highlighted in red, our property income as at first quarter 2022 was 66.4 million. And this sees a movement of 14.7% increase from first quarter 2021. And in terms of our net property income, that was at 57.7 million. So that also saw an increase of 18.3 million year on year. Then moving down to net income, it was 39.1 million. And that saw an increase of 22.7% compared to same quarter last year. So in terms of the DPU that we announced the first quarter of 2.42, that also saw an increase of 8.5% compared to the same quarter last year. Our number of units in issuance as at first quarter was 1,634,524,115. So that increased by 13% from the same quarter last year. So in terms of financial position, so our investment properties, as you can see, there was a change of 54 million. In terms of total assets, there's a slight decrease, moving from 3.7 billion compared to the previous end of financial year end, which was 3.8 billion. So if we move down to the net asset value, that stood at 2.531 billion compared to 2.527. So that's an increase of 4.263 million. And in terms of total unit holders fund, as at the last quarter, that was 2.53 billion. So our financing ratio had a slight decrease compared to financial year end, so that was 29.4%. NAV per unit, as mentioned earlier, this is 1.55 ringgit. And gone through the number of units in issuance. So a quick look at the 5-year trend for financial performance. So in general, the revenue, net property income, and net income is tracking positively upwards over the last 5 financial years. So we also see the distribution per unit chart on the bottom right. So as mentioned, the first quarter announced DPU was 2.42. And let's move on to the next slide. Yes, on the dividend distribution policy. So the REIT distributes quarterly income distribution, and typically from the first to third quarter, at least 95% of the current financial year-to-date distributable income is paid out. Whereas for the fourth quarter, at least 99% of the current financial year-to-date distributable income is paid out. And for the financing profile, we see the column on the right. The first quarter 2022 total financing is 1.1 billion out of 3.76 billion of assets. So the financing ratio sits at about 29.4%. Our effective profit rate is 3.9%. Then if we look at the percentage of short-term versus medium and long-term financing, this is a ratio of 44 to 56%. So not much change from the previous year ratio. Our percentage of floating rate financing is 32%, whereas for fixed rate financing, 68%. So this has been on a slight increase since 2020. The total number of unencumbered assets on our portfolio is 21 out of the 61. And the percentage of unencumbered assets over our total asset value is 31%. Now, a quick look at return comparatives to give us an idea of the Axis-REIT's distribution yield in comparison with other REITs. So based on the annualized Q1 2022 DPU payout, our distribution yield is 5.2%. EPF dividend return for the latest one announced was 6.1%. 10-year MGS is 4.13. FD rate and OPR are both at 2%. So there is a bit of positive spread between Axis-REIT's distribution yield to say the FD rate as well as OPR. And moving on to our final section, this is on stock information. So let's just start on the left side of the slide. Taking 14 June's share price of 1.93, the market capitalization would have been 3.15 billion. And the annualized distribution yield, as mentioned earlier, is 5.2%. And based on the unit price of 1.93, the return on equity is 6.2%, and the return on assets is 4.1%. And on the right side of the chart, the top 10 unit holders of the Axis-REIT. Starting from the top, we have EPF at 9.45%, then followed by Kumpulan Wang Persaraan, 8.85%, and Lembaga Tabung Haji at 4.66%. And we have one of PNB's funds, which is Amanah Saham Bumi Putra. This is 3.87%. For number 5 and 6, Mr. Teo Peng Hui and Mr. Alex Lee Lau, these are the REIT's promoters. So these they have share unit holdings of 3.5% and 3.3% respectively. And on number 7, we have another EPF fund at 2.2%, followed by AIA Berhad, which has 2.09% unit holdings. Then at number 9 and 10, there are two public mutual funds, which is Public Tikal Siko Fund at 1.92% and Public Small Cap Fund at 1.68%. For the number of CDS accounts, which is also the number of unit holders that we have, it we are happy to actually see this very positive growth of number of unit holders of Axis-REIT from the last 10 years. If we look at 2012 onwards, we had 2,850 unit holders, and this has progressively moved up. In fact, we observed a jump from 2020 onwards, where you can see 6,776 move up to 10,000, past 10,000. And as at 31st March this year, we already have 11,022 unit holders. So breakdown of this figure of 11,022 holders, the total foreign holdings is 14.15% of the total unit holdings. And in this, within this foreign holdings, the related party takes up 5.68% and non-related party 8.47%. And we also have a breakdown of related party holdings, which is 9.82%. So that pretty much covers our presentation for the webinar, but we will now proceed to the Q&A, and I will pass the floor back to Shane. Thank you.
All right, thank you so much, Ms. Chan, who is the Senior Manager of Investment and Investor Relations on Axis-REIT, to share with us this excellent presentation. So now we would like to invite Ms. Leong Kit May, who is the Axis-REIT CEO, to join us in this Q&A session. All right, so if any questions ask the Senior Management of Axis-REIT, please write your question in the Q&A box, not the chat box, so we can easily manage your question. So write them in the Q&A box. So we have about half an hour for the question and answer. All right. In regards to your slide, right, when you talk about unencumbered properties, it means that those properties, they are fully paid, right?
Hi Shane, yes, I'll take on that question. So when we refer to unencumbered asset, whatever assets that we have in the books are all fully paid for. So that is being reflected under our assets under management. So those unencumbered assets are the assets that we have not used to secure for bank financing. So those are free of encumbrances assets that have not been used for bank financing purposes.
All right, thank you so much for clarification. Now, in regards to one of the slides, which you talk about portfolio diversification by industry, I noticed that there is one which is 37% vacant. Could you clarify about that? 37% vacant.
I think that perhaps it's just a color that's not very clear between the dark green and the light green. If Tze Wee, can you move that to that portfolio diversification slide? I think 37% reflect referring to the manufacturing facility. Hang on, just refer to that particular slide. Okay.
Oh, right.
Yeah, so the difference is between the light green and the dark green. So the vacant, because at the point in time, our occupancy rate is 96%. So 4% is vacant, but 37% is actually our exposure, because our tenants are actually in the logistics space. Sorry, logistics, not manufacturing.
Okay.
So these are our logistics tenants.
All right, understand.
Yeah, glad that you pointed it out because it's not very clear.
Okay. The next question is by Raj Kumar. As interest rates are expected to go up, what is the expected impact to your net profit margins for financial year 2022?
Okay. I think based on 31st March 2022 results that we have announced, 68% of our financings are really secured under the fixed rate borrowings regime. So we are only exposing 32% of our borrowings to floating rate. So the percentage of floating rates loans are very low. But nevertheless, with the increment of 25 basis points in the OPR, that will result in additional 900,000 interest rate per annum that the REIT will have to pay, and that is translated to 0.05 cent impact to our DPU. So the impact is not significant.
0.05 cent. So every 25 basis point hike.
25, every 25 basis point, it'll be 900,000 impact
900,000.
Bottom line.
The increase in the finance income, finance interest.
Interest.
Okay. The next question is, are you seeing a general increase in the value of your properties? And what would be the expected net income increase, if any, due to the revaluation of your properties?
We normally, for revaluation of properties, we do it every year. So whatever you are seeing that being reflected under our asset under management, that is based on the latest valuations that was obtained. So the last valuation that was done is in the fourth quarter 2021. Which is just a few months back. So for last year, we have recognized a fair value gain of 63 million positive fair value gain on our property. This year, we have yet to roll out our valuation exercise because we always do it end of the year so that unit holders will have a 12 months comparison. But what we have seen that, of course, in terms of valuation, is always being conducted by independent valuers, the names of surveyors, Knight Franks, JLL, and so really is done very independently. But of course, these are all based on recently transacted property prices and also the income of the fund. So what we have seen is that for last year, the REIT has recognized a positive rental reversions of 5.6%. This year I think what we have seen until June now, we are still recognizing positive rental reversions, but we are unable to share the exact numbers. That one we'll leave it to end of the year before we share with the retail investors and also our unit holders. But with the incremental in revenue, we foresee that should have a positive impact to our valuation of properties as well.
Okay, thank you, Ms. Leong, for addressing the question. The next question is, what is your average rental reversion rate across your various properties? Between single tenant versus multi-tenants, which one has a higher rental reversion rate?
I think rental reversions, last year we did a positive 5.6. I think the year before was also a similar positive, close to 6%. If you are comparing between a single tenant versus multi-tenant, I think then it goes back to the type of assets that we are looking at, the type of assets and location of the properties. Typically, the single tenanted properties are the industrial properties, because the warehouses, the manufacturing facilities, those are all single tenanted. And we know in the last few years, and especially the last 1-2 years, this sector, there's a big demand for warehousing and also manufacturing space. So that drives the positive rental reversions in that particular sector. For the multi-tenanted properties, this is the office property, and also our business parks, where we call it office or stroke industrial property. Of course, we know that in office property there are some oversupply issues that even started pre-COVID time, and so that sector, I would say, if you compare against the positive rental reversions between office against the industrial, of course, the industrial properties will lead in terms of the positive rental reversions in the last 12, even 24 months.
Okay, thank you so much. The next question is by Raj Kumar. So he noticed that your income distribution reduced downwards from financial year 2014 from 19.75 cents onwards. And for financial year 2021, it is 9.49 cents. So what are the reasons for this income distribution reduction?
Since the REIT was listed in 2005, until today we are 17 years old. So back in 2015, we actually did a unit split on our share capital. So for every one unit that unit holders hold, they will get additional units. So one split into 2 unit split. So for that reason, you will see the adjustments in terms of the income distribution as well, because the shareholding space is double. So in terms of DPU comparison, you should divide that by half as well. But for 2014, back to Mr. Raj's question, we actually have a one-off gain on disposal of property. So we did a disposal of property in 2014, where we recognized a 1.6 million gain on disposal. So that gain on disposal was fully used to distribute back to shareholders. So that resulted in the incremental in the DPU for 2014. So typically, if you look at how we started, right, back in 2005, we started with only 5 properties. I think with a total asset value of 300 over million. Today, we have grown the portfolio to 61 properties with 4 over billion in size. So our strategy is to continue to increase our asset under management, our footprint in the market, so that your shareholders will have a very diversified and a strong asset base in the portfolio. But on and off, we do have to dispose asset. As much as every asset is valuable to us, but because certain assets sometimes change, the characteristic of the assets change, and we need to do disposal. So every time when we dispose an asset, we believe that unit holders will need to be rewarded as well, as we've been shareholders with for so long. So all the gains from the disposal will be 100% distributed back to the shareholders. So that's the case for year 2014. Yeah.
Okay, thank you so much. That's a very clear explanation. So that leads to the next question by Vaven. How do you select properties to be purchased? What are the criteria that you considered?
I think earlier Tze Wee also have a slide on that on slide 16. Of course, for every real estate investors, when you look into an assets, we always look at it on a long-term view of the assets. So we look into long-term potential of the assets. Of course, in the last few years, our focus have been very much industrial focus, because actually when we started, we are very much a industrial diversified REIT, and our focus, of course, will be on the logistics properties, manufacturing properties with long-term leases. This is some of the criteria, but we will also consider properties that have shorter leases. I think what is important to us is that where we see value to the fund and to the shareholders, where we can add value to the properties. So at the end of the thing is that very much properties is all about location. Where is the property located? Tenants can be with us today, and there are new tenants that may come in a few years down the road. But what is important is how attractive is the property, right? So location is prime. The use of property, the design of it is all prime. So we have over the last these years managed to turn around properties. We have properties that where we bought. I think some of you may remember that Tze Wee did mention that we did our first development that on by Axis-REIT, the 515,000 square feet of warehouse that was built for Nestle. When we bought that property, we actually bought it maybe somewhere 2009 or 2010. When we bought it, this was the open car park space. It's a pre-delivery inspection center for Proton cars. So after 6 years, after they have left, so we started to reposition the property. And given the rise in warehousing demand, we actually decided to build and started marketing as a logistics space. And that is when Nestle came to us for the build. So like any other real estate investors, we always look for good opportunities, properties with good locations. But of course, getting the right asset is very important. But purchasing at the right price is very important. Yeah.
Okay. So how do you fund all these acquisitions?
Acquisitions are all funded by bank borrowings. Because typically how we operate is that the rates have a gearing limit that was set by Securities Commission, that is measured against our total borrowings over total assets. So under the guidelines that Securities Commission have fixed, it cannot exceed 50% of our total asset value. So each time when we purchase, we actually finance with bank borrowings, and as our financing level has gone up higher, and we foresee that it's close to around 40%, that's when we will start to do a placement an equity placement to bring it down again, so that we will have the headroom for future acquisitions. So yeah, so when you look into the past financing ratio of the REITs, you will see that it will go up due to acquisitions and it will come down again via our equity placement exercise. So we have continue to do that, and I think this so far we have really done 8 equity placements to the market.
Okay, thank you so much, Ms. Leong, for the clarification. The next question is by Vincent. As the properties in the portfolio are scattered all around Malaysia, is the management team split into different regions to perform maintenance and operation?
Our facility teams are all in-house. I think one key thing about Axis-REIT is that if our leasing team and every one of us are all in-house managing the REIT business. So even facilities team, the one that's dealing with the tenants, ensuring that the tenants are happy on our side, they are all in-house. We have actually a satellite office in Johor and also in Penang. So the Johor one will take care of all the southern assets. So the tenants and properties in the southern region, and the Penang satellite office team will take care of the properties in Penang and also in Kedah. So that's how we are split. Now, of course, Klang Valley, where most of the properties are located, that's where all the HQ are. Yeah.
Okay. Mohammed Imran would like to ask, what are the plans to diversify into data centers, or communication towers? Do you have such plans?
We do have plans to go into data center. As it is, the portfolio, we already have one data center which is located in Petaling Jaya. So of course, this sector is growing, and we'll also be looking at opportunities to further expand the portfolio with more data center.
Okay, understand that. Richie noticed that 75% of the REITs are into a single tenant. So she want to ask, do you see this as a risk to the company?
I think to us, we find that the asset portfolio is quite diversified. Even though we say that 75% are single tenanted, but because the portfolio as today's size is 4 billion, and we have 61 properties, so as it is really quite diversified. The reason that high exposure to single tenanted is very much depending on the type of assets that the REIT investors in, because industrial properties, typically industrial assets are mostly single tenanted, because manufacturers themselves, when they are occupying a property, they want to occupy the entire site for their own use. So it's very much the nature of the sector itself.
Okay, so you measure this 75% based on the asset value or based on the number of properties?
I think the 75% is based on net lettable area. Let me just go back to the pie chart. I think it's based on net lettable area. Yeah, it's based on the space. So space, based on the 12 million square feet of space that the REIT.
So out of these 12 million, 75% are single tenanted. Okay. The next question is by Teck Hock. Given the current increasing ESG requirements, dormitories for foreign workers are in high demand right now. So is Axis-REIT considering these properties?
I mean, firstly, he briefly touched the issue on ESG. I think Axis-REIT are heavily putting a lot of efforts in ESG in terms of environmental, the social, and also the governance part. In terms of whether we will consider dormitory assets, I think there are some that they came to our attention, but I think our focus will still maintain at industrial assets where this is where the activities take place, the warehousing, the manufacturing, where locations where physical activities takes place. I think when we deal with dormitory, is a very different ballgame because requirements change and getting stringent as more and more focus on ESG. I think dormitory at this point in time, depending if you're asking whether we I think the operator is important. If there is a dormitory assets with a single operator, let's say a big manufacturing company that take on, that would be easier for us to consider. But if it's dormitory that with many different occupants and all, I think then would be something that may not be of interest to Axis-REIT at this point in time. I think our focus will still be the industrial assets itself.
Industrial, okay. Now, okay, so that leads the next question by Chuan Fu. During the COVID-19 pandemic, people started to work from home. I think you have about 8% on commercial, right? So what do you think about office space? And will they still be relevant in the future? I think there are about 30 years lease properties. What is the plan after the lease expired?
Okay, there's two parts to the questions. The first part is on the pandemic time, the work from home arrangement, right? Whether people will come back to the office and office assets will they still continue to be relevant, right? I think we believe office assets will be relevant. We are back to office and operating full force since end of last year. I think so far the portfolio, we only have 3 pure office properties. There's along Federal Highway, you can see Menara Axis, Crystal Plaza, and Quattro West. So these 3 properties are doing quite well. In fact, even during the pandemic time in 2020, when the start of pandemic, our occupancy rate for Quattro West actually increased from I think 41% to close to 100%. So even this year, we have seen properties like Crystal next door property, another office building, occupancy rate has gone up to 90%, because there are some offices that because of the COVID, because of this business continuity plan, they need to look into another disaster recovery office to diversify their workforce. So they have actually taken up space, outside of sometimes Lhasa office always like to be in central business district near CBD, but some of them actually have diversified their offices beyond CBD as part of this business continuity plan. So we have also seen increase in the demand for office space for this type of tenant as well. And I think the second question is on leases, right? 30-year leases, what's our plan for when it comes to the renewal? I think when it comes to the expiry of the leases, nearer to the expiry, we will be looking at renewing and extending the lease. One of the property, I think is D21. This is also a lease property because typically port property that are close to the seaport, airport, those are under private lease arrangement. So last year, one of property D21 actually have remaining 4 or 5 years remaining on their lease. So we have actually got it extended and for further 30 years. So that is how we operate, and we believe that when it comes to the expiry, we will be renewing that extension so that the REIT can enjoy the longer lease tenure on the property.
Okay, thank you so much. The next question is by Cheaton. In anticipation of the rise of the 10-year MGS to 5+%, how do you manage the unit holders' expectation in yield return for Axis-REIT? Will Axis-REIT need to acquire future asset at a higher than 6.5% yield?
I think interest rates, of course, there's 2 parts to it, right? The one part is on our financing. I mentioned we have capital management policy in place to always ensure that big chunk of our borrowings are on long-term fixed rate. The other part of it is, of course, in terms of our return to shareholders. We always be looking at ways to ensure the shareholders have consistent and improving DPU, growing DPU. So of course, the focus will be very much on our 12 million square feet that the REIT has, right? So ensuring that the portfolio is stable and also creating value to shareholders. On top of the 12 million square feet that you're looking at, the REIT actually, when we mentioned there is a development in the pipeline that we are doing at Bukit Raja, that will add on another 500 over 1,000 square, I think no, 600 over 1,000 square feet of net lettable space portfolio. And we do have another a piece of land which is next to Nestle that we are intending to develop ourselves. So these once are completed will definitely create a better income and better return to shareholders. So with that, we hope improvement in the DPU so that shareholders will be able to have better DPU return. But in terms of higher yield and all, it's always a factor of against our DPU and share price. And share price is something that we, as REIT managers, we can't control that, but we leave it to the market forces. Our focus is to focus on doing the business and doing it well.
Yeah, nicely said, Ms. Leong. All right. So that shall conclude our question and answer session. So we would like to thank both our honorable guests to join us in this webinar that is titled Growing Through Acquisition. So ladies and gentlemen, you just heard from Ms. Leong Kit May, who is the Axis-REIT CEO, and also Ms. Tze Wee, who is the Senior Manager of Investment and Investor Relations. So I hope that today you have gained enormous insight into Axis Real Estate Investment Trust. So yes, we will see you next time in our next Bursa Malaysia webinar with the PLC. Thanks, everyone.
Thank you.
Thanks for tuning in. Have a great rest of the day. Bye-bye.
Thank you.